Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from TAOIF Limited. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I am very pleased to welcome Toby Pierce, CEO and Director of TAOIF Limited, which trades on the OTCQX Best Market under the symbol TAOIF and on the TSXV under the symbol TAO. Welcome back, Toby.
Thanks, Matt. I appreciate everyone's time today. So I'm Toby Pierce, the CEO of TAOIF. I've been with TAG for approximately 9 years now, and we've been focused for the last 3 years on Egypt in particular. We have a field called the Bedwa Field and are focused on the Abarosh F formation. I'll walk through TAOIF's operations, where we're at, and some of the upcoming plans we have. Forward-looking statements, I'll let you read this at your leisure going forward. So yes, as Matt mentioned, we're listed on the TSX Venture and the OTC as well. The focus recently has been on the MENA region in particular. We were formerly in New Zealand. We started working on our first acquisition in Egypt after Abby Badwi joined us in September of 2020. And I'll walk through Abby's background in a minute. We got our first deal announced in October of 2022. We raised capital shortly thereafter in November of 2022. And we have about 196 million shares out, fully diluted. Walking through the management team, so Abby Badwi, I'll give a little bit more on his track record in a minute, but he's been with the company since September of 2020. He joined after he left a company called Kuwait Energy. He'd sold that company and joined with a gentleman by the name of Sunil Gupta, who was with him at Bankers Petroleum. Sunil's our COO. We had 2 new board members join at that time as well. Sean Reynolds, who's a portfolio manager at Van Eck, and Thomas Hickey, who's a legal counsel in France at the moment. Rounding out the board, we have Keith Hill. Keith is formerly CEO of Africa Oil, part of the Lundin Group, and then Gavin Wilson. Gavin represents Meridian Capital, and Meridian Capital is our largest shareholder at 19.9%. Management and insiders own an additional 13.5%. My background, I'm a geologist by background. Spent almost 10 years in the City of London as a financial analyst covering oil and gas stocks, and then came back to Vancouver to run TAOIF. 2 key, very important team, but 2 key members of our team that I want to point out. Gamal Rest is our country manager. He helps us navigate Egypt. He's got almost 25 years experience in oil and gas. He worked with Abby Badwi when he was at Raleigh Energy back in 2007. And joining us more recently is Samir Abadi. And Samir's got excellent relationships within Egypt in the operational end of things, the drilling end of things. He's formerly chairman of HALDA, which is the joint venture between Apache and EGPC, and also he was part of EGPC as the vice president of operations. Very well connected and helps us on many fronts on the operations end of things. Really, where we're at right now, the working capital is as at year end. We've got approximately 16 million at the moment in working capital. We generated for our vertical well up to November, approximately November 1st. We produced about 10,000 barrels gross in that well, and we have about 600,000 US owing to us on that. In New Zealand, we still have a royalty across our old assets. That generates approximately 1 million US per year. And they are, we understand that they might be doing some improvements on their acreage. So we could expect that to grow somewhat. In Australia, the operator there has drilled two what they claim are successful gas well tests. We see no revenue from that royalty yet, but it could be something reasonably significant in the future. So the focus really over the last 3 years, post our sale of New Zealand and Australia, has been on Egypt. And really the last year has been very active post our acquisition of the license. In May of 2023, we managed to bring on our first oil production at the Bed 107. I'll talk a little bit about Bed 107 in a minute. Around September 1st of last year, we commenced drilling our horizontal. It's taken a while, but we're pleased to announce that we've completed the lateral of that. And over the next 6 weeks, we're preparing to frack that well. It looks like we'll do approximately 12 stages of fracking of that well, and should have flow results end of April, early May timeframe. So a little bit of background about why we focused on Egypt in particular. So I originally met Abby Badwi back when I was an analyst in 2007. 2005 through 2007, to be honest. So Rally Energy was essentially the first company that Abby was CEO at, and a very, very successful run. Managed to, from the time he joined to when it sold, the shares appreciated about 700% in the span of about 18 months. He went on to join a company called Bankers Petroleum. Many of you probably know it was a heavy oil field in Albania, and they had a significant number of wells that they grew production from. When he joined, it was doing probably around 2,000 barrels a day, and when the company sold, it was doing over 20,000 barrels per day. That's where he met Sunil. Many of our team members come from Bankers Petroleum. They have extensive experience drilling horizontal wells and with heavy oil and recompletions, etc. That was sold in 2016, and Abby went on to join Kuwait Energy, which was a private company. He helped get that company right-sized, and they sold that company in 2019 for just over 800 million US to a group called UEG. And this is where Abby really rekindled his relationships in the MENA region, the Middle East in particular, and Egypt more so. So he got to know all the local government members, etc. So he saw a great opportunity, and after TAG had divested its assets in New Zealand, we were looking for a route forward. We teamed up as a group and managed to not only land the Bed 1 concession in Egypt, but are also working on a number of different things. Plus, we had the benefit of adding a couple of new exciting team members. So Egypt in particular is it's been in the news quite a bit recently for a number of reasons, but it's quite stable. It's it really is one of the key areas in the MENA region. It's got a very educated workforce. We are very fortunate. We've got a number of most of our staff are nationals, highly educated, well trained. It's got a long history of oil and gas production. Oil and gas in general is a very important industry for Egypt. They import approximately 300,000 barrels a day of oil and liquids, and are very keen to grow that back to the million barrels a day that they once produced. Recently, there's been questions around the security of Egypt. We send people in and out, no problem. It's safe and secure. I'd be happy to take my family there right now. I find it's very, very stable and secure. So the Bedwa Field, you can see our field is in the heart of the Western Desert. It's a 26,000 acre concession. We have the rights to what's called the Abro Chef. If you can see the slide there, it's the light green is the source rock for the Western Desert. That's the Abro Chef. That's what we're targeting, and we believe we've got some of the better Abro Chef acreage in Egypt at the moment. The concession itself was previously owned by or operated by Shell, produced almost 90 million barrels of light oil from deeper horizons, primarily deeper horizons. It was given back to the government after its 30-year tenure. So the benefit of that is we've got access to great infrastructure in the area. So there's a facility with just over 25,000 barrels a day of processing capacity. Approximate current production going through that right now is about 5,000 barrels a day. So lots of extra room for any of our oil to go through. We essentially get 62% of the net revenue, and out of that share, we pay for all the operating expenses, CapEx, of course, our own G&A, and a small shipping and handling tariff. Out of the 38% share that the government interest, they're responsible for all royalties and taxes in that. So the reason we really became quite excited about the Abro Chef in particular was the similarities it has to the Eagle Ford in South Texas. And as we've drilled wells and expanded our understanding, the similarities are even more marked than we could have imagined. So basically, it's the same type of rock, roughly same type of depositional environment, roughly the same thickness and depth of emplacement, age. Where we have a slight competitive advantage is the average water saturations are lower than the Eagle Ford. The pressures are quite a bit higher than the Eagle Ford themselves. And the one negative against the Abro Chef perhaps is that the oil in the Eagle Ford is quite a bit higher quality. Now, we've successfully flowed the Bedwa 7 well. The previous operator, Shell, has flowed a number of Abro Chef wells conventionally. We were targeting this in a more unconventional manner, but ultimately, we have used the Eagle Ford to help us as a template to help us design our wells and how we approach exploiting these. So here's the Bedwa concession, the 26,000 acres. We've got really good 3D seismic across the concession itself. We're really focused on about half the concession. You can see the well locations. The Bedwa 7 was our vertical well that we completed. The Bed 4 T100 well is the horizontal well we completed. You can see the horizontal is up near the apex of one of the structures. We have really good data. Shell, there's over 50 well penetrations that go through the Abro Chef on our acreage. We've got good 3D seismic. We've got well logs. We've got cores, etc. So really understand where the oil is and where we sit relative. So we're quite confident the oil's there and where the oil is in place. Now it's about unlocking that oil and getting oil to surface. So the Bedwa 7 was really a proof of concept. It was a re-entry, stabilized. Once we brought it on with the ESP, it stabilized about 140 barrels a day. There were some issues with seal around the well. We are working on potentially bring that one back online. It proved up all the things we needed. We did a diagnostic fracture injectivity test, and it really has helped us understand what fracks work, how to put the frack in appropriately, etc. So we had a really positive response on this, and we're pleased with the results. This allowed us to move on to the T100 horizontal well. We've had a number of issues with the horizontal and the drilling. Some of it was bad luck. Some of it was, we needed probably a little bit better equipment. But we've managed to successfully drill the lateral. We stopped at 308 meters on this horizontal well. Originally, we'd planned to drill out 1,000 meters, but we had really good rock, although we had very high pressures and significant fracturing. So we chose to curb the well early, and I'll talk a little bit about that in a minute. So you can see the directional plan here. Lots of noise on the diagram, really, but the orange well path is really where we went, and we got just about to the fault zone. We had really good rock the whole way through. We saw better than expected porosity, better than expected permeability, more fracturing than we expected, and the oil is slightly higher quality than we originally tested in the Bed 107 well. So we're quite happy with what we see and the potential for our flow back plan. As a reminder, RPS, the independent reserves consultant, gave us 1,000 to 1,500 barrels a day as the low case for flow back on this well. Slide has a lot on it, but really what I want everyone to take away from this is there's over 500 million barrels of oil in place across the concession, and that's just half the concession there. Our initial field development plan of 20 horizontal wells, is just concentrating on the east central lobe. So with those 20 wells, you get about 1.2 to 1.3 million barrels gross per well, and that's the target of each horizontal ultimately. RPS, again, the independent consultant, gave us a value for those 20 wells in that east central lobe, a value of over 420 million US just for that. That's unrisked. We see potential for infill drilling as well, plus the central, eastern, and western lobes all have additional potential for horizontal wells. Directionally, we can see, as we drill things out, we can see 50, 60 plus locations beyond the initial 20. So lots of running room once we prove this works. And just a final slide here before we take questions, but we are working on a number of different other acquisitions. In particular, we're focused on Egypt. We're focused on additional Abu-Roshaf acreage. We have been connecting with a number of industry players. We've been chatting with the government as well, and trying to formalize something that's a little bit more that has more Abu-Roshaf acreage on it. Our view is if we can capture 50 to 100,000 acres of Abu-Roshaf, directionally, we'll have access to several billion barrels of oil in place. And as we unlock the Abu-Roshaf in particular, that will of course translate into a larger resource, which will make us ultimately more attractive for a takeout in the future. We are looking at a couple other regions. We're very focused. We have had some discussions about entry into Oman, and perhaps in the future we'll have more to chat about there. So that wraps up the presentation part of my talk, but I have a number of questions here, so I'll just move on here. So can you comment on the high pressures experienced while drilling? Sure. So when we got out to about the 270 meter mark, we encountered a whole series of fractures, much more intensive than we had originally planned for. It was about a 40 meter section, just over 120 feet. And the pressures were quite high. We were taking lots of gas, very high gas readings through the mud gas equipment. We experienced quite a bit of oil across the shakers into the mud tanks, and we were very excited by this. It slowed us down significantly to safely drill through this. The team rightly had to slow down, make sure that the hydrocarbons were out of the mud system before they could proceed. And the pressures themselves were a little higher than we expected, and which was a good thing. It is a good thing. Ultimately, we cut the well a little bit short, just because we were having we were safe the whole way through, and we had no issues. But if we had ever experienced an issue with the rig, or there was some sort of downtime of some sort, we just didn't want to proceed and potentially have something untoward happen. So we decided to cut the well somewhat earlier than we wanted. We were in very good hole. The rock itself was very competent. We had not encountered the fault that we had encountered in a previous iteration of the lateral, but at the same time, we felt it was prudent to terminate the well at that point. Okay, next question. How does the shorter lateral length of 300 meters versus 1,000 meters planned impact production rates? Well, that's a good question. We don't anticipate it to affect the actual initial production rates. In fact, all the data we see suggests that the initial production rates could be quite a bit higher than what RPS has guided. Ultimately, the longer the lateral, the better prospectivity you have of later life production. So everything being equal, if you have a longer lateral, you could potentially see higher volumes produced over the life of the well. So that's the real difference there. Ultimately, with a fracture network as intense and as thick as we saw, we don't believe that this particular well will have volume or productivity issues. On the contrary, actually, we're really excited with the geos, and the geoscientists are very excited with what they see on this well itself. Okay, next question from Harry. Given the pressure in the ARF reservoir is substantial, any plan to forego fracking in some regions of exceptional porosity in the targeted ARF interval? Not really. We plan to do approximately 12 stages. We're prepared for 12 stages. I would suggest that the fracture part, we're just going to do an acid wash, an acid clean out, and won't do mechanical fracks into that. But we anticipate 9 to 10 mechanical fracks into the rest of the formation to make sure we've got good exposure. Ultimately, we do want as much of the frac as possible to go away, and into, when I say go away, go into the reservoir. The reason being is our engineers and geoscientists will be able to impute what the recoverable volumes may be even on a 300-meter lateral versus a 1,000-meter lateral. It will give us much more color and understanding of how the reservoirs will perform going forward. So while we're not doing the full 35 stages, of course, we're going to do more or less the same, but over a shorter interval. Another question, are blowout preventer equipment, etc., relatively accessible and cost-effective in Egypt, or do you plan to import such equipment? Good question. Generally, equipment is widely available, especially on the drilling end of things. It's quite readily available, drilling rigs and blowout preventers, etc. Drilling steel, where things, where we might need to import equipment into Egypt is if it's high technology or something newer that has not made its way to Egypt yet. Perhaps some of the newer bits, mud motors, etc. But that being said, Egypt has a very robust market. They've got a big offshore industry, so they do generally have quite a bit of access to equipment, etc. And of course, in the region, Saudi, UAE, etc., you can get equipment from there as well. Question, can you comment on any potential acquisitions you're working on? We've made no bones to the market about the fact that we've been working at picking up additional Abarochef acreage in Egypt. That continues. Our chairman, Abi Badwi, is in Egypt right now for a number of reasons, but one of those reasons is to try and secure more acreage. No real timeline on that yet, but we anticipate by the end of the year we'll be able to comment. So another question, when will you be drilling your next horizontal well? It's a good question. So we're planning for our next horizontal well already. Originally we'd been planning for May. It's looking like it may slip till June or July for that horizontal. The big thing we need to do is secure a drilling rig. The rig we used prior has now been given back. We are looking at picking up a different drilling rig. And there are a number of drilling rigs readily available in the marketplace. So we're working diligently on that, and we'll announce to the market here before too long timing for go forward on the next horizontal. Question from Andrew: what are your milestones for 2024 and growth drivers? It's a good question. The growth drivers obviously are the flow results from this T100 well expected around May 1st. That's the biggest growth driver we have. It's by far, it will set the tone for the rest of the year. Of course, any acquisitions that may occur, that's also could be significantly positive. We are in conversations about potentially looking at a number of other vertical wells. Of course, drilling second, third horizontals, of course, will be drivers as well. We really do want to get at least one more horizontal well drilled in Egypt by the end of 2024, calendar 2024, and so that's really the focus there. And I have time for one more question, so this is the last one here. What are the current financials? Do you need to seek additional funding for the additional equipment and extra costs? Not really, to be honest. It's while we may choose to seek additional funding if it's available, at the moment we have enough cash to drill our next horizontal well, and provided we have any successful test rate, which we anticipate we will, all that cash flow will be available to pay for additional equipment in the next horizontal well. So that's really my presentation. I thank everyone for their time, and please reach out to TAOIF if you have any further questions. And that's all for now.